Well, yeah, so the topic of the second half of our debate now is how global exchanges can make money from new financial technologies. I think Adam has teed that up very well by talking a little bit about the opportunities he sees. But I'd like to start maybe with Axel and ask, from your perspective, what do you see as the most lucrative areas of new financial technologies from the point of view of an exchange?
Yes, very good question. First of all, it's great to be here, so thank you all also for being here. It's a great opportunity to have the opportunity to talk to you. In terms of the areas for revenue generation from exchanges, I think there are many areas which already you touched on in the sort of previous conversation with Adam. I think before we talk about revenue generation, I think one of the first aspects that exchanges are looking at is cost sort of savings and sort of where are the efficiencies. Or where is that lag that exists currently in the process? Because as Adam sort of touched on before, I think all of us here are well set up to operate in the same way that we have been operating the last few years for the coming years. But the question is, how can we use the technology, the exciting technology, blockchain, distributed ledger technology, to actually improve existing systems, which are very, very sophisticated systems. So exchanges, just so everyone understands, are essentially technology companies. So ourselves as the London Stock Exchange, we have, for instance, 400 software developers within the London Stock Exchange group. So we are big investors in technology. But at the same time, there's always the need to improve and innovate, particularly in a world where, for instance, trade execution nowadays comes down to milliseconds, so thousands of parts of a second. And it's important. People want to make sure that their trades are executed at the fastest possible time, and they're willing to pay for this. So accordingly, as an exchange, we look at where are potential areas to improve current processes. And one of the areas, for instance, which was highlighted before, is clearing and settlement. There was a recent report sort of published by Oliver Wyman and Santander, sort of the bank, whereby just adopting that sort of distributed ledger technology within the exchange sort of world and the banking world would sort of create synergies of up to $15 to $20 billion to 2022, for instance. So there's a lot of efficiency that could be sort of generated from there. But there are many other sort of interesting areas where exchanges can generate revenues. Some areas that weren't touched on before, for instance, proxy voting, the way sort of shareholders vote when a corporate makes decisions, the way dividends, for instance, are distributed, sort of all these processes which could be automated. Some exchanges are looking into looking at KYC, sort of knowing your customer, so making KYC tests and using blockchain technology to actually share information with sort of a variety of different sort of participants. And essentially, the exchange space is a space where a lot of data and information needs to be processed. It's vast amounts. I mean, it's all real-time information, essentially. So having technology which enables to process this information and actually distill useful information out of this is very, very valuable. So I think there are a lot of opportunities going forward.
Fantastic. Well, as a journalist who sat through a lot of shareholder votes, I can certainly vouch for the attractiveness of a way of counting them more quickly. Agnieszka, how about you from the perspective of the Warsaw Stock Exchange? And what potential do you see in investing in new technologies, and what is the Warsaw Stock Exchange doing in this regard?
First, thank you for the invitation to the conference and to this panel. The fintech industry is one of the hottest topics in the world of finance and also for the exchanges. But we have to remember that it's hard to compare Warsaw Stock Exchange to Nasdaq or London Stock Exchange because Warsaw Stock Exchange has no technology arm. However, Warsaw Stock Exchange should creatively build on the experience of others and seek a competitive advantage in innovations. Currently, Warsaw Stock Exchange is updating our strategy, but we are considering a lot of advanced technology projects. But we will be able to tell you more after publishing our strategy. Other exchanges launch dedicated platforms where startups can raise capital and use new blockchain technology, providing a number of benefits, like, for example, short settlement times, less system complexity and cost, or fewer or even no intermediaries. The best example is Nasdaq, which announced the launch of Link, the platform linking issuers and investors. Currently, Warsaw is closely watching the initiatives of other exchanges, and we are considering the development of the private placement platform for startups based on blockchain technology, where issuers could raise capital and from interested investors.
Well, thank you very much. Just so that you know, we'll be taking some questions from Slido as well during the debate. So if you have any, please do feel free to add them to the questions we've already got on the list. Adam, seeing as Agnieszka brought up Link, would you perhaps like to give a quick overview of what you're doing there and what the thinking is behind it?
In terms of Link?
Yeah.
Yeah, so one phenomenon that's happening on the global level is that companies are staying private longer. There's so much access to capital, so especially in the US in particular, but also more and more in Europe, we have the phenomenon of the unicorns. The unicorns, these growth companies that are able to access late-stage funding, which has, in a way, not replaced the IPO, but delayed the IPO. And when we looked at this space, we saw that many of these companies essentially face the same issues that many of the companies have solved through an IPO, creating liquidity for employees, for early investors, etc. So when you have, reached the EHIJ round of financing, which some of these companies have done, you have a lot of employees that are sitting with shares and don't know where to sell them or how to sell them. So we created something called Nasdaq Private Market. It's only for unlisted companies. And really, basically, we help them create liquidity. And around that, we have created a project around blockchain, leveraging blockchain called Links. So you can follow the issuance of the share, and then throughout the life cycle in terms of the cap table and, for a company to follow exactly who's owning your share, who's managing it, and how, if you transact, where does it end up, and so on. And that's really the aim of the Link platform, to make the whole private world more transparent, foreseeable, and easier to manage. And it's in particular a US phenomenon, but we see it more and more happening here in Europe. So that's really the Link project. But it's the marketplace that we're doing it around is Nasdaq Private Market.
Well, I think that is a very nice segue onto the second part of this debate. So basically, the way I see it is there's two ways that exchanges can make money from fintechs. One is by incorporating them into their own business, and the other is obviously by bringing them to market and so on. But as you say, one issue is that a lot of fintechs are now staying private longer.
Yeah.
So what can exchanges do to make it easier for fintechs to come to market? And at what point is it appropriate for a fintech company to go to market rather than look for private placements? Maybe we'll start with Axel on this.
Sure. I mean, the question needs to be answered sort of on a case-by-case basis. I mean, every company is sort of different, operates in a different field, has a different sort of level of maturity. I think what we have in common as exchanges is that we are sort of financial infrastructure sort of organizations who very much deal in the ecosystem that exists. And we are here to help develop the ecosystem, particularly around fintech, given that we are pretty much fintech companies ourselves. For instance, in the London Stock Exchange, we have a program called Elite, which basically works with sort of smaller, fast-growing sort of companies to help them scale successfully. That includes sort of organizational changes that the companies go through, as well as addressing various funding needs that the company has. And we help those companies. It's a 2-year program. It's a little bit like a fitness program for companies, making sure that companies are ready and attractive enough to attract external investment. We have now 700 companies in this program. It spans 25 countries, so it's a pan-European program. It's been growing very rapidly, and we help those companies get access to funding, whether it's through venture capital, private equity, or private placements. We have a private placement platform to that. So we work already at the very early stage. I mean, we're talking about companies which have single-digit revenue numbers from across Europe, including Israel, etc. So that's something that we are doing to encourage companies to develop. I think the stage where companies are ready to actually go onto an exchange on the real public market, for that the technology needs to be proven already. So you can't be in that experimental stage, which I think many companies still are. So you need to have a much clearer path to cash flow generation, potentially profitability, etc.
I can just jump in because I think fintech is so wide in terms of the topics. So we've already seen the payment industry come to market. World Payments got listed on London Stock Exchange. Nets got listed on Nasdaq Copenhagen. PayPal was spun off from eBay, reflecting the value of the payment structure. And that's a fintech company, without a doubt. And the other interesting thing is, so the payment sector, I think, is well established, well understood, coming to market, and leveraged by IPOs. And you see more and more private equity companies going into that space because it's really high leveraged. The other aspect is that you see we've had a number of banks that are coming to market are IPOing on our exchange in the Nordics, and they are building their business model from a different angle, leveraging technology, how to access the customer, how to serve the customers, how to do credit valuations of the customers, and so on. So they are, in a way, applying fintech to a traditional business. And then you have the other aspect of fintechs is that it's such a highly regulated environment or sector. So a lot of these companies are essentially, once they've found traction in their business model, and there's foreseeability in terms of predictability in their business model, they have all the regulatory environment requirements in place. Some of them even have a bank license. So from a pure readiness point of view, many of these companies are actually more ready than any other sector to be able to manage the public markets. But they have to have a foreseeable business model. And that foreseeability takes time, and I think you alluded to that before you actually see where how is the spaghetti sticking on the wall, what kind of returns are you getting, and what's working. So I think fintech is already there. We will see next year more and more companies, at least in our markets, coming to market. But payments is definitely there. And we see crowdfunding with Lending Club in the US. And there are so many different sectors, niches that are more established, more understood, coming to market. So I think it's just a question of time.
Agnieszka, what's your view? I mean, what do you think that exchanges can do to act as a trampoline for fintechs, as it were? And what barriers do you see?
Exchanges, in my opinion, are a kind of support instrument for the capital market or for a wide range of companies. Exchange may assist fintech startups in raising funding for special projects. In addition to cash, we can give them something that is, in my opinion, particularly important to them. That is our reference as a...
The credibility.
Yeah. Exchanges should also address the expectations and strive to simplify or even eliminate onerous or time-consuming procedures which are typical for capital markets. We hope that blockchain will help to cut operational costs and consequently the transaction costs also. Through such initiatives, Warsaw Stock Exchange wants to join the technology race and to meet the expectation of the fintech startups. Warsaw Stock Exchange has taken the specific steps. For example, we have initiated the concept development and strategic work with BizFund. This is the Polish equity crowdfunding platform. And we want to build with them the acceleration platform in Poland, which will be dedicated to startups and beneficiaries of equity crowdfunding. This acceleration platform, will support innovative entities in Central and Eastern Europe at early stage of growth in order to promote the regional business and bolster economic growth in this Central Eastern Europe. The joint acceleration platform will also actively cooperate with other accelerators in Poland and also beyond of Poland.
Thank you very much. Well, I've seen a couple of fascinating questions coming through on Slido, so maybe we'll take a couple of these now. Since we touched on ICOs already, ICOs versus IPOs, is a synthesis possible anywhere in between? Adam?
I think IPO wins.
And why?
No, I think at the end, I think that right now ICOs and IPOs are two different things. You know, an IPO is not only about raising capital; it's about so many other things. It's creating a different ownership structure. It's making sure that you create, you know, a transaction where basically you have a clear ownership. There's a clear dialogue between new investors and so on. ICOs is not really that today. You know, many ICOs, no one really understands exactly why they're participating, why the money is being raised. There's no dependency on the follow-up. You don't become a shareholder. It's a very unregulated environment. So in my view, for ICOs to become relevant or more relevant, they have to become more regulated and they have to become more trustworthy. I'm not saying it's not impossible, but right now it's not an alternative. It's not an alternative to an IPO. IPO creates so much more value.
Axel, Agnieszka, you have a view on this?
Yes, regarding the note that there is an opinion of Polish Financial Supervision Authority, because according to PFSA, blockchain can be successfully applied in the financial industry. However, opinions regarding the initial coin offering are divided. The supervisor is concerned with a number of risks and regulatory void in this area. The market sees initial coin offering as an opportunity for more earnings and growth, while the regulators and supervisors are aware of the risk.
Axel, last word for you, maybe?
I think we will see it at some point. Right now, I fully agree with my two sort of colleagues on the stage. Right now, it's the wild, wild west. I mean, right now, you simply don't know. I mean, if you invest in an ICO, you don't have any sort of legal sort of security and guarantee what's going to happen. I mean, people could take the money and just spend the rest of their life on Hawaii or something. Literally, there's literally nothing which would stop them from doing that. So it's a very, very dangerous game. But that doesn't mean that in the future we'll see some sort of convergence of the two, whereby it is possible to potentially the two to converge and use in an IPO process blockchain technology, for instance. I mean, I think there are efficiencies to be gained from that.
Fantastic. Well, I think we've had a good overview of the opportunities as well as the risks of investing in new technologies for exchanges. So thank you very much indeed, Agnieszka, Filip, Axel Kalinowski, and Adam Kostyal for your time.
Thanks.
Thank you.
Thank you. Thank you.